Good morning, everybody. This is Jack Gleason with Startuptrading.com. It is March 25th, 2020, Wednesday. For overnight news out of the Great Britain pound, we had CPI numbers. At 2 p.m., we had PPI, or 2 a.m., we had PPI. 4 a.m., Credit Suisse economic expectations, and the German final business climate. This morning, core durable goods orders for the U.S. and durable goods orders. We have HPI, and then tonight or later today, crude oil inventories and CB leading index out of the Australian dollar. So nothing really major outside of the crude oil inventories for the U.S. dollar, which will affect oil. And then tomorrow morning, out of the Great Britain pound, we have the monetary policy summary, official bank rate, and the MPC official bank rate votes, as well as unemployment claims, which, look at this number. It's never been bigger. The forecast tomorrow, this is going to be the biggest event all week for the unemployment claims. They're expecting, I've never seen a 4-digit number here. The previous was 281,000. They're expecting 1.5 million. I've heard expectations a lot higher than that too. So something to be aware of for tomorrow. Let's take a look. We'll start off with the VIX here, and I just want to show you guys this is really important. We're going to back out to the 30-day hourly chart. And we're going to talk about when the market began selling off, really selling off. Sunday night, the 23rd of February, we had a gap down. At that point in time, the VIX began trading full 50% retracements from 1755 the high, extensions. It was once, twice, 3 times, 4 times, 5 times, 6, 7. Then we had an 8th. Okay, we were going into last week or this week to in our 9th extension long. Okay, in our 9th extension long. This was our 8th. The 8th traded on, what was that, Tuesday the 10th, and then completed profit targets. That actually went extension to extension, and then we rolled over into the April contract. Now, what's crucial about rolling over to the April contract is that means that no institutions have their VIX hedges for April. So what ended up happening here, and we've been following this pretty closely, is the VIX came full halfway back. Now, we can go out to a weekly time frame, and you could even say pull halfway back from 2017. If you want, you can use that as a halfway back because that is the low. Regardless, yesterday, what I was pointing out was that even though the S&P was up, the VIX was holding this halfway back long. And this is what we need to pay attention to moving forward to determine whether or not this market is going to go down and continue to go down in a series or continue to go higher. Now, we had traded the 50% going into the close, and we were just dilly-dallying. Now, we spent most of the overnight session consolidating and then really began our bid this morning coming out of 430. I'm taking, you could argue that there is an extension here, which there is participation, but I'm going to be more conservative as a halfway back from that 43 to high. Okay? Like I said, there is an extension here that has had its participation. If that gets a completion, we'll go same anchor to high. But right now, the next entry into the ES, I would begin looking short the S&P 500 as the VIX would trade 47.85. But if the VIX continues to go up in a series, the ES will not go higher. So let's talk about where the ES is. First off, coming out of our all-time high, we had a full traditional 50% retracement short. For those of you guys who understand the rules and how Fibonacci sequences function, there is then, once we go through that negative 61, the possibility of extensions. especially on the daily chart. Now, extensions are extremely rare for the ES to trade on the daily chart, which is what this would be. Extensions are extremely rare. So we have this extension here that on the daily chart is a bearish below 2600. Now, that we have also run into a retest of the halfway back short we've been in from last week on Friday. So that was Friday's high, and this has been on our chart all week. The 13th, Friday the 13th to the low of the 18th, that 50% retracement was 24.79.5. The first time that traded was in the after hours, and now again, that level has traded in the after hours. So I don't like to have two daily fibs on my chart, so what I'm going to do is I'm going to delete the extension. Just be aware that that level is a 25.15, and then I'm just going to leave up this traditional because that seems to be holding. Now, let's analyze the other side of the market just like we did yesterday. As we entered into the trading day, we talked about what the sequence was from lows. And it's a little strange if you ask me, but you have the gap up into Tuesday. We had a traditional. And then what actually ended up holding, for whatever reason, we did have an extension. Okay? But we came back into that next traditional, which is just a strange sequence. Now, that ended up being the original high in the overnight session, and for whatever reason, we have come back down into that same traditional here again. Okay, so going into this morning, we're going to continue to look at the VIX for confirmation of the direction of the index. And the range that I am anticipating here this morning, and it very well could be a range, 24.79s to 23.83s. Okay, a huge range. This is what I'm expecting the market to kind of gyrate through here this morning. If we make a new high, 25.15, I do think we're most likely, we've been in a consolidation, or I'm sorry, a downtrend. I do think we're most likely going into a consolidation for at least a couple days until that unemployment report. I don't think the market's going to do too much until that unemployment report comes out. So I'm just going to mark up levels above and below. If we trade lower, we could bounce. If we trade higher, we could sell off. That's the type of price action I'm anticipating. So I'm marking up that full 50% retracement long here at 23.35.75 as well. Right? So those are the levels that I'm going to be paying attention to closely in the S&P. The Dow, little interesting, different sequence. You had your full 50% retracement in the Dow. Trade through targets, just like the S&P. We have a daily extension. That daily extension has held. We want to be aware of the next traditional above. Anything is possible that could trade today with the way the market moves. That would be 22,573. I want to be aware of where the full halfway back would be from the long side. And that would be 19,788. And then let's go to a smaller time frame. Take a look at what is the move we're currently holding. And it just looks like a halfway back from the gap up Wednesday. So these are almost identifiable only after the fact. It's not a series like it was to the downside in the indexes when we were trending down. So that's why it's really so important to watch this VIX here. When the VIX trades this 47.85, where the indexes are if they're at the resistances, because the VIX is more technical. Moving on to the Nasdaq, this is what we had for the Nasdaq. You had your 50% retracement from highs, and then we had our next measured move from the swing high, the third to low. That traded 2 Fridays ago. We've retested that 38.2 overnight. And then what I wanted to do is just take that same high and draw it to the new low and be aware of where that level is. So that level is 72.81. I'm going to keep the original draw up. All we're doing here is coming up with supports and resistance. Like I said, these moves are so big that we want to determine what we believe to be potentially the bigger support and resistance levels that can have major reactions. Okay, that's all I'm trying to do here. Our full 50% retracement in the NQ would be 71.93s. And then the current sequence that the Nasdaq is holding, so we can be aware if we do break out. Let's see here. Coming out of lows. This is the gap open here. Yeah, it just, for whatever reason, this 12 p.m. low has been used multiple times at its 50% retracement. That, for whatever reason, that is the anchor. It's been used 3 times to target. It's kind of interesting. All right, moving on to oil. We are sitting in a full 50% retracement short. It's been our resistance level for 3 days. We have oil inventory report. There's a halfway back in here. That halfway back is counter trend. But we have been sitting inside of this. First off, let me just back out a bit and I'll show you guys some of the bigger targets we have. There is a high to low from the 11th to the 18th. The halfway back was last Friday. We broke down. That targets 1682. And then we have that high from Friday to low, and that targets 1897. So there's no setups to the long side here. Okay, there's 2 setups lower. Does it mean we can't go higher? No. Just means that's where the setups are. We've already traded the entry for the last 2 days. I don't really think there's much to do going into the oil inventory unless you're really trading the smaller time frame. Both the targets point lower, and that's where they are. Moving on to the USD JPY, I think this thing's, for whatever reason, it's just been rejected at this 111.50 level over and over and over again. But look at this bull flag. I've never seen like a more perfect bull flag, I think, in my life at this point. It's just kind of funny. But yeah, this extension here targets 112.36, and I imagine once we really break out, and I'm going to go out to a higher time frame here, that 112.36 brings us back to the high of 2020 and through it. And assuming we get through it, this thing could really break out. Now, initially, I was thinking there was a possibility that we could complete this massive short target as we were aggressively selling off, but that trend broke, and with the trend break, you have to begin looking at the other side. And when we look at the other side, there is a long setup here in the USD JPY, which takes the USD JPY up to 137.71. So when we were trading lower, we had halfway backs. Those turned into extensions. Those extensions turned into new extensions. Those extensions turned into new extensions. And then that same anchor new low traded and then broke. That's when the trend broke out of the lows. We had a halfway back to target, halfway back, halfway back. We began a series in here. And there's just been longs holding ever since. This is the long setup we are in, and it takes us through some pretty significant resistance levels. So this is the beginning of a potential swing trade if we break out of the highs of 2020. And we're starting to see other breaks in the currency trends, including the Aussie dollar, which broke its daily sequence last night. Now, we were anticipating this or looking at this, but we had a full 50% retracement short. Or no, I'm sorry, this was an extension from 68.48. It was once to target, twice. Here was the third time, full blowout, low to low. That low to low has been participated on. Rejection, rejection. And then we started seeing on Monday, after they started talking about how big the stimulus was going to be, buyers came in at a full 50% retracement long. We broke out above our shorts. We traded them on Monday. We broke out of them and then began holding long sequences. Now, with the completion, and now that we've broken that long sequence, we can begin looking at the full 50% retracement long for the week. The full 50% retracement long for the week would be a valid long setup. It's a 58.87. The euro is still in shorts, but with the other currencies breaking, this is something that's a possibility that the euro breaks as well. However, the euro is an extension from the 110.54 to low. We traded the 38% retracement. We made a new low. We traded the 38% retracement. Traded it 50, 50. We've kind of been going sideways in it. There has been a counter trend long that's had a bid, but this sequence lower is still holding. And the resistance level is 108.53. 108.53. I'm going to mark up this 50, but that 50 is a counter trend trade. The trade sequences have been short. Gold has gotten a dip into an extension. Been posting a couple of things of what's going on in the gold market, but it's actually pretty interesting and somewhat historical. But the COMEX gold market, somebody has requested delivery from COMEX, which holds the physical gold behind the gold futures, and they can't deliver it in the denominations that they have. So the GC futures contract is 100 ounces. They are requesting physical gold from the London bullion. I think it's the London bullion. It's the LBMO, which I don't know exactly what it stands for. I would guess it's the London bullion market operation. But they are requesting gold bars from London. The COMEX, which is a US-based gold exchange, is requesting gold bars from London, and they are planning and have already announced that they are going to launch new gold futures contracts that are in different denominations, because the London Bullion Market Exchange apparently has 400 ounce bars and the COMEX is 100. So they don't have time to remold the bars, so they need to change the size of the futures contract. It's pretty crazy stuff. But anyway, we obviously had this massive run, and it's really a lot of that is on the back of that news. If we back out and take a look at our targets, we have some targets all the way up at 1859, and we have targets all the way up at 2317 half. Huge. We had this extension, and you could have argued this extension was, also happened to line up with a low from Tuesday to high, or that mid high. But this to me is what the move is. You had traditionals coming out of Monday, and then a just total explosion of price action. It's kind of interesting. So if you look at the last run, this is even bigger, but we had a traditional, into an extension. That traditional used an extension twice, and then it took, a week and a half to break that extension. We're inside of this. We traded the 38 yesterday. In the overnight session, we made a new high. There was a series in the overnight session. We had a traditional trade 2 targets. We had our second traditional trade 2 targets. And then here was the third move in the sequence that broke. When we broke that sequence, we began having shorts trading gold. This is really, really technical. We had one short, 2 target. You had your second short, 2 target. This is the third short, and it has traded and broke. So now we have a long coming out of the bottom of the range this morning here in gold. And that long setup is at 1632. Silver, we had a traditional complete at 14.59 half last night. After we broke out of shorts Tuesday, we had a traditional here, target. So there is that next measured move from the 1370 anchor as well as the 50% retracement from Tuesday's low. And that's at 1407. Okay, I'm only going to leave one of these up with the more aggressive one. But we confirmed this upside target in silver by breaking out of the opposing short, which is at 1463. So I'm going to set an alert above 1463. We break above 1463. We confirm our 1517 upside profit target in silver. For the Great Britain pound, there was an extension sequence from yesterday's trade plan. We consolidated in it all day long. We finally broke out above that sequence in the overnight session and completed our extension targets. I'm going to continue to watch this same anchor new high. We have just traded that 38.2. The 50% is down at 117.72. A break of that level would confirm our resistance all over again. But we are running into, I believe, prior lows. Overnight high is the prior low. You can't even see it. I go further back. Is the prior low of 2019. We have run into that prior low as well as a 38 retest of the extension from the 28th to low. You can see coming out of that high, we were sold into 150% retracement. This technically would be the next traditional. And then the USD CAD. Yesterday, guys, we had a long setup, and we were drawing from here. We had once target, twice. The third time traded yesterday, we broke. We broke here. After we broke, we set up in a 50% retracement short. That 50% retracement short leads us down into a retest of the 142.03. But this USD CAD clearly is looking like it wants to roll over. Let's just back out here on the higher time frame. We could, if we start completing these short targets, we could, there's no knowing where we're going to stop. We could pull full halfway back long for the year, as the CAD has been an incredible aggressive bull run. And if it starts rolling over, which it is participating on shorts, we could fall all the way back into the full 50% retracement long from the lows of basically the last day of 2019 a high. All right. That is going to wrap up my morning trade plan. If you enjoyed this content, please give this video a thumbs up. I will share my levels with those of you in the trade room. If you're not in the trade room, make sure you join by clicking the link below, as well as check out my simple training course if you're brand new to futures and would like to learn more. Everybody trade safe. Have a wonderful day, and I'll catch you guys on the SWAC. Take care.